Summer 2079 ended on a very strong note with gains across the board. In fact, all sectoral indices ended in the green, with the PSU index giving the best returns and emerging as a new leader of this bull run. So we asked the experts what to expect in Summer 2080. CNBC TV18 did a dipstick survey across more than 20 market participants to gauge the mood. The biggest feedback was they continue to bet on stocks as a preferred asset class. So that was the highest, 68% voting for stocks. Only small portion of people opting for gold, and fixed income was the second best as the most preferred asset class. So what kind of return should one expect in Summer 2080? 45% of the market participants see the Nifty ranging between 21 to 22,000. Only a small 9% expects the Nifty to fall below 19,000, but there was an equal amount of bull versus bear, with nearly 13.5% each voting for a Nifty above 22,000 as well as below 19,000 as well. So earning has been a big driving force for this market to outperform. So we asked experts what to expect in terms of earnings in FY25. Nearly 50% of the participants expect the earnings between 12.5 to 15%. There is a small portion who also expects the Nifty earnings to be much higher, between 15 to 17.5%. So that's the earnings perspective. Now, what to expect in terms of sectors which can do well, or what they'll bet on. The biggest feedback is that this could be the year for the return of the large caps. 50% opted for large caps, and only 13.5% said that small caps can continue to outperform. So what are the sectors which can do well in Summer 2080? Financials stand out in terms of the biggest bet, and within financials, it's the PSU stocks which they expect will continue to outperform. The least preferred sectors were autos, cement, pharma, and manufacturing. All have done well, but now they expect a bit of underperformance there. So what's the key risk for the market going into the next somewhat? The key domestic risk seems to be the general elections in 2024. For almost 55% opted, that's a big risk for the market. From a geopolitical perspective, the biggest risk seems to be two things. One, the geopolitical risk as well as the Fed policy. These were the two big risks from a global perspective. But given the momentum in the market, looks like Summer 2080 is going to be a good note, but this could be the year of return of the large caps.